What's up, guys? Welcome back to DCA. So what we're going to do in this video is take a look at a price analysis for Ethereum. We're going to go through several different metrics to understand perhaps where we're at right now at this moment with us trading at $1,841. So we've seen a significant correction today. But we're also going to look at some metrics which may be able to show us where potentially the price could be going into the future. So if you guys are new to this channel, what we do here is data analysis of the cryptocurrency market. We do objective analysis. I just go over the data, I present it to you, and I let you make the decision about what you think the price may do based on the information and the data that I lay out for you. So I say that in particular with regards to Ethereum because back when we were trading at around $3,000, we were actually right here. We had just gone below 3K. We had gone down to 2,900. I made a video talking about the fact that if we head into a bear market, it's very likely that we are going to fall down to $1,800. And I learned a harsh lesson on that day. It's that people do not like to hear factual information if it doesn't confirm their biases, their preconceived notions with regards to what the price is going to do. So back at that time, you know, everyone on YouTube was still in a extremely bullish state. Everyone's saying that we're going to new all-time highs. The market's heading up from here. And on that day, I made a video called Ethereum to $1,800. All right. And I received a lot of negative comments that day. In fact, I was shocked by it because up until that point, most of the feedback on my videos had been fairly positive. But on that day, I had people, you know, calling me all sorts of names, and it was a real wake-up call to just sort of what you're competing with, because you have a lot of content creators that don't care about telling you the truth. The only thing that they care about is driving subscription, driving clicks, driving views, okay? And so they give you information that confirms your biases. But here, I'm not very interested in that because, you know, my ultimate goal here isn't to grow my channel to have as many subscribers as I possibly can. My goal on this channel is to provide clear, fair, and objective analysis of these markets. If they are looking bullish, I don't mind saying that they're bullish. But if they are looking bearish, I also am not going to pull punches and tell people that they're not looking bearish just because, you know, it's not what people are going to want to hear. So I tell that long story here just to let you know that this $1,800 price isn't a shock. It's not surprising at all. You could also head over to the Discord channel to sign up for the DCA index risk model. If you look here, I have the DCA index risk model for Ethereum laid out, and you can see what this model does is it shows us when the price is very likely at a maximum for a market cycle, or at least a maximum percentage gain for the market cycle, and very likely to go on a large correction from there. So you see back here in 2017, for instance, we peaked out actually in June, not at this peak price here in January. But in between that time, when we reached the peak level on the risk model, we had actually gone up thousands of percent to that point. And from this level up to here, we only went up an additional 300%. And that was in between a price correction of around 75%. So the model simply tells you when the asset has simply run up too far and is very likely to require a large correction coming forward, all right? And that's what we've seen. And then in this market cycle, when we reached here at 4,271, that was when the model got into that 90 to 100 range, okay? From there, we had a large correction going from around 4,300 all the way down to around 1,700 that we hit back here in July until we went on our most recent run, all right? At that time, you know, we went up to 5,000, but in terms of your percentage gain, during this time of the market cycle, we went from $89 up to $4,300. And that's what the model is trying to identify for you. It's trying to identify what is the best time to be involved with the asset, not necessarily where is the maximum price. And now you can see that where are we at? We're at one of these historic lows. We're at one of these levels on the DCA index risk model that is suggesting that the price has significantly corrected. But you have to remember, and this is something we always say on this channel, these models have been trained in the setting of a macroeconomic bull market. Ever since crypto has existed, we have been in a macro bull market. So there have been quote unquote bear markets in the crypto market, but these have been in the setting of a macro bull market. These prior price corrections and all of this data analysis and all of the models that we've used to sort of gauge what the crypto market is going to do in the setting of a bull market versus a bear market, a lot of those models, and I'm not even talking about data models, machine learning models, or whatever. I'm talking about just the way that we think about the market. A lot of that has all been formed in the setting of a macroeconomic bull market. So if that begins to change, we will also need to reconsider how we're thinking about the crypto market. Because if we head into a bear market, we'll be in uncharted territory for this asset class. This asset class has never come under fire like being in an actual bear market. And I'm not talking about the crypto bear market. I'm talking about a macroeconomic recessionary type event where the stock market, is trending downwards to sideways for potentially a year or more. We've never seen something like that with the crypto market. Okay, so the first thing I want to look at is this chart here. When we made that prediction that Ethereum could very well head down to $1,800 or even lower, how did we come up with that? What was the sort of the framework we were using? And that was by looking at this here. So this is the realized price of Ethereum. In other words, it is the average price of all Ethereum that has moved on the Ethereum network. And you can see that price is $1,800. So broadly, you can think about this as the average price at which individuals are holding Ethereum. Okay, so let's move over to the Bitcoin chart just quickly, because I can explain it better when we look at the Bitcoin chart, because there's more price history. So when we look at the price history of Bitcoin, this is showing us the realized price for Bitcoin from 2011 all the way through today. And how you can think of this is if I bought a Bitcoin back here at around $100, so sometime in 2013, and I put that Bitcoin into my wallet, it gets recorded as being a $100 Bitcoin. Now, if today I sold that Bitcoin, I moved it onto an exchange and I sold it, it would get recorded as a $29,329 Bitcoin. That's how we are able to look at the average price, because these networks use open ledgers. And when we can see where every coin has been moved or every token has been moved on the network, we are able to figure out what is the average price for the asset. And the reason that this price, this realized price, matters is because, in general, long-term holders of the asset do not like to sell below their cost basis. So as the short-term sellers get out of the market, and if you've seen analysis that we've done recently, we've showed that many of the short-term holders in this market have left. They've left the market and capitulated. They've capitulated, and now we're something at like an 80-20 long-term holder to short-term holder ratio. So when you come down to the average price that long-term holders are holding the asset, very often, especially the older an asset gets, they are not going to capitulate when you come down to their price. So you run into a supply shock. You run into a supply shock as you come down to the average price of all Bitcoin held on the network. And that's what we see. Now, if you go back here, if we go back to, let's say, 2012. Notice that at that time, this was the realized price of Bitcoin. It was around $5 and we came all the way down to around $2. Okay. So overall, it was about a 65% drop below that realized price, because you have to imagine back then, there weren't many long-term holders, right? It's a new asset. It's a newer asset. There aren't many long-term holders. A lot of people still don't know what the asset is. Is it going to be worth it? And they want to make profits, because a lot of them are holding it since maybe 7 cents or $1 even. Then we come to this market cycle. Now it's gone to $1,200. It's starting to make the news. People are learning about it. And you have your first cycle where you really have a lot of FOMO. They come in, they FOMO in, and they get caught at the top. All right, so they capitulate. We have this long capitulation wave, and notice where we finally sort of meet a support level at. It's down here near our realized price. We do go below this average price of holders on the network for a short amount of time. And notice that in this first cycle, what happens? We go 65% below that realized price. Then in this next cycle, what do? We go 47% below our realized price. All right, so now that takes us over to 2018, where we again drop below this realized price. But this time, notice each time it's coming closer and closer and closer to our realized price. Because as the asset grows, as it matures, it sort of gains more support. There are more long-term holders who believe in the asset and its long-term potential. We previously were down about 45%. In this cycle, we were only down 30% or so, okay? So each cycle, it's got about 15 to 20% less below that realized price than it did in the prior cycle. Now, if you come to this cycle, notice that where our realized price is sitting at, it's sitting right at around $23,700. This is the kind of stuff that you have to look at. You have to look at the things that both are positive about the market, but also the things that are negative about the market. And so what are the positive things? What are the positive things that we can take away from this? Based on the seemingly increased adoption of this asset and, associated crypto assets, I do believe that this is going to be an incredible time to be buying the asset as we're down at 29K, as we're down at 25K, potentially going down to 23K or less. Historically, these are the best times to buy the asset. So to go back to Ethereum, now that we've sort of broke that whole analysis down of how this realized price works, let's see, what did Ethereum drop below its realized price in its first market cycle? And I don't think it's coincidental. We've showed that the adoption rates of Bitcoin and Ethereum are very similar to one another. And as their adoption rates have been similar, so too has their price growth. So we've seen that, Ethereum in its first cycle with relatively low adoption, it's a new asset. We're heading into a severe bear market. We see that Ethereum drops 68% below its realized price. We can just look at the asset now, and it's got significantly more growth. It still remains a riskier asset in general than Bitcoin does. Now, it also, in my opinion, has much higher return potential though. So these are all things you have to consider. So the price of Ethereum, this is one day behind. If the price continues to head down from here, ultimately, where could we go to? We have to look at this realized price model because it's not just a construct of prior observations. It's a construct of investor behavior. When we get down to individuals' realized price, when we reach the average price of this asset, it becomes more likely that we run into a supply shock, and it becomes increasingly so as we move closer to older and older and older holders of the asset who have it at lower and lower prices. Because if you've been sitting on this asset ever since we were down here at $70 and you haven't sold yet, you're sure as heck not going to sell as we're coming down farther in price. If you're still holding and you bought it at $70, it's because you believe in the asset. You believe in its long-term potential, okay? So as we get down farther and farther, you've essentially reached all of the capitulation that you're going to reach. So based on what we just said, based on what we've seen, I never want to say worst case scenario because worst case scenario can always, black swan events can hit and lead to significantly worse price levels than you ever expect. COVID, for instance, no one ever expected Bitcoin was going back down to $4,500 again. But nonetheless, no one ever expected that, Ethereum was going to be back at $94 again here in March. But nonetheless, so based on the model that we've seen from Bitcoin, where in its first cycle, it dropped around 65% below its realized price, what potentially could happen this cycle? All right, so it improved to the next cycle to around 45% below. And that puts us, I think not coincidentally, right at around $1,000. So ultimately, we're saying that is a very severe circumstance. If we were to go down to $1,000, I think that would be a generational buying opportunity, a type of buying opportunity that you're very unlikely to get again. Now, a lot of people, all the people that called me an idiot for saying it's going to $1,800, you should be ecstatic right now if it's at $1,800, especially if you're on here getting mad right now about what I'm saying and you're calling me an idiot. That means you're scared of the price going down to that level. And truly, that's a test of your belief in the asset, not mine. That's a test of your belief. that tells me that you don't actually believe in the asset if you're scared that it's going to go to $1,000. because I own a lot of Ethereum. I acquire Bitcoin and then I acquire Ethereum in about a 60 to 30 ratio every single week. And I've been doing it for years. I relish the day that Ethereum goes to $1,000 because that would be the buying opportunity, of a lifetime. The market has continued to play out just like we've seen it play out in the past. So if we got to $1,000, I don't think it's the kind of thing where it would stay there long, because people like myself, and I know a lot of other people, would be just acquiring the asset in huge amounts as it went down to that price. Now, with that said, and I'm going to say this one more time, just like saying that the price can never go to $1,800 again, you never want to make that mistake. Saying that it has to go to $1,000, you never want to make that mistake either, because you never know how far the price will actually go down. It could go down to 1,000, it could go down much less, it could go down much more. And that's why having some sort of investing strategy where you are, using a regimented approach to get into the asset, and then you have a regimented approach to get out of the asset. I think it's a very realistic way to approach assets like this that have massive volatility swings. So I know this is a long one, guys. I know there's a lot that I just covered, but hopefully some people are able to take this to heart and, sort of realize what our actual potential is here. And I would not be surprised to see this asset head down potentially below $1,800. And I don't think $1,000 is out of the realm of possibilities. So that's going to be it for this one, guys. Until next time, as usual, see you.